up next on this stage, we have the convo around the opportunities for hedge funds, asset managers, pension funds. So pretty cool. And that's going to be moderated by Graeme Tennant. You would have heard from Graeme earlier this morning. And on that panel is also Reginald, Labuschagne, Nersan, Naidoo, and Werner, Gerber. So looking forward to asking him some tough questions here.
So I'm pleased to say that you're at the best panel of the day. We've got various esteemed panelists, and we're going to be talking about crypto institutional adoption, which I think is a great topic. So we've got Nersan from MidSquare, Werner from Skybound Capital, and Reg from Sanlam. So I think we're going to have a great discussion. I think it would be a good way to kick off just for each of the panelists to give you an overview of their business, maybe where they sit in that business and what the business does as a start off, and then we'll get into the crypto element. So Nersan, do you want to kick us off?
Thanks, Graeme. Good afternoon, everybody. My background is traditional finance. I spent most of my life in banking and asset management. I'm now co-founder of a business called MidSquare, which is effectively a cryptocurrency hedge fund. So effectively what we do is create a regulated, familiar way for investors who want to access cryptocurrencies, who don't want to self-custody or manage all of the infrastructure risk around that, to access it via fund structure that they would be familiar with and benefit from returns in that sense.
Hi everyone, I'm Werner. I'm probably the least qualified to be sitting on this panel today. My background's really been private equity and private credit. So your difficult questions for these two gentlemen, please. I am an investment guy, investment solutions guy. So what does that mean? I'm a professional bridge builder. I build the bridges between investors and investments. Skybound Capital has about $2.5 billion under management, predominantly in private credit. So yeah, that's me in short.
Perfect. Sure. Sorry. So I work for Sanlam Private Wealth. So yes, we're under the Sanlam umbrella. I sit probably, I always say, in the enviable position where we deal with high net worth individuals in South Africa. And a large part of our job is being challenged by these high net worth individuals to find interesting investment opportunities for them. That includes everything. So we're always kind of at the front end of needing to find out what's happening in private equity, private credit, for the retail investor side, obviously. And you know, we've been for the last 7-8 years been challenged quite a bit on this crypto space. I always say, as much as we do private wealth management and asset management for private individuals, our core job is actually helping that individual. As each one of you sitting here, you've probably got some journey you're going on as an individual, you know, whether it's a financial and personal journey to get to a point. Our core job is getting clients from point A to point B, right? Part of that is we constantly get challenged by advocates, by people that come to us and say, listen, you're stupid not investing in this thing or that thing, and that varies from private equity to everything else. We always have to be the skeptic to make sure that we sit with the client, understand their needs, and understand what that client can stomach in terms of sticking to that journey. Because our core job is making sure that we prevent the client from making a stupid financial decision. That's kind of the core of what we try and do. Because typically, if the markets are high and it drops down, clients tell us how stupid we are for being in the markets, and we've got to, at that point, keep clients on their journey to get the benefit of being in the asset class they're meant to be on to get to that journey. So hopefully with that as background, we'll have some interesting discussions around how we've been challenged in different phases of these cycles in different asset classes, and also the other side of it is the infrastructure side that we need to solve from an efficiency point of view. So yeah, look forward to that discussion.
Okay, great. So I think, yeah, I've been to quite a few of these different conferences over the years, and yeah, until quite recently, the question was always, well, when are the institutions coming, right? When is institutional capital going to enter the space? And I think what's really exciting is that the institutions are here, all right? But now I think it's quite intimidating when you look at the different aspects that crypto has to offer, right? Is it a payment rail within the banks? Is it the stable coins? Is it an investment opportunity? Is it the underlying infrastructure of blockchain? So it can be a little bit overwhelming to understand, like, where do the most attractive opportunities sit? So I think it'll be fascinating for us to understand, maybe from each one of you, sitting within your respective businesses, what is it that you guys are most excited about this asset class and this technology? So maybe we'll go back to you again, Reg.
Yeah, look, I think there's no simple answer. It's all of the above, right? I think for me, interesting, we've been in the space now for about 7, 8 years, and I think the biggest thing that's changed for me that's driving a lot of this adoption, and it's been, initially it was seen as two very different worlds. You had the, kind of the DeFi world sitting and moving out in this rebellious anarchist state that wanted to take over things, and pointing to the muggles on the other side that don't understand what this thing's about. And I think what you're seeing happening is there's a convergence taking place where, we're ultimately allocators of capital, and people start looking for opportunities to see how to get efficiency in where you allocate that capital. Part of it's going to be in the infrastructure side. So there's utility for us as a business to improve the efficiency and how we do things. We can talk about some of those examples later. The other part is allocating capital where there could be growth, right? Where you can get some form of, capital uptake or growth for, and some of it's supporting teams that's doing interesting stuff, some of it's supporting assets, etc. So I don't think there's a simple answer to that. I think where the institutions, the infrastructure side is almost the easy adoption piece because there's immediate utility. I think the investment side, you're going to have a massive view on people not trying, if you talk purely a crypto kind of coin that's attached to something that you can't, the traditional finance space can't value. They always look for some type of intrinsic value or cash flow or something like that, and there's a big challenge on that space still. Where we find some interesting spaces, probably what Nersan is involved in, is some of the hedge fund stuff, because again, this whole crypto space is full of inefficiencies, and there are people that can exploit that in the traditional sense of hedge funds. So we've invested in some hedge funds for our clients that are purely native in the crypto space as well. That's done well. So I think it's a combination of things.
Okay, cool. Werner?
I think for me, it's actually quite a straightforward one. Being a breach builder, like I mentioned, the blockchain technology behind it it's phenomenal. I think I was fortunate enough in a previous life to work for quite a big fund administrator. Working for a big fund administrator, I can tell you guys, administration is sometimes a bit of a pain for anyone who's dealt with administrators. I was also then super fortunate in 2023 to have been part of a process whereby Hamilton Lane actually tokenized one of their credit, or a share class in one of their credit funds. And that actually then sparked this idea of this is the next bridge. Fast forward 2 years, and I truly think that private credit is the perfect use case for blockchain, for tokenizing share classes. So essentially, creating a share class, tokenized share class that sits next to the traditional share classes, governed by the same frameworks as the traditional funds, thereby, improving and increasing availability, liquidity, distribution globally. It's certainly much more transparent, settlements a lot easier, and then the big pain, administration a lot easier. So for us, it's really the technology of blockchain. How to tokenize the real-world assets, making them easier available, more efficient, and inherently increasing the value thereof.
So I think it's such an interesting use case. I'll be keen to expand on it a little bit further. So, what we're talking about here is private credit, right? Which is typically quite an illiquid asset class. So that's, instead of giving so having money into like a business that will then repay your loan with an interest, right? That's private credit.
Yeah.
And often it's quite difficult to get it in and out. So what are the benefits that blockchain actually offers for that?
It's exactly that. It's essentially creating that secondary market. It's creating liquidity, which we've never had in this space. You traditionally look at monthly traded portfolios, and anyone who's ever tried to get on a platform or list platform, whatever, it's a mission to get these funds on those platforms. And all of a sudden, we create a secondary market, significantly more liquidity. The thing is, in my 16 years of first, working in corporate finance and then, 10 years in admin, we don't have a shortage in investors or, in investments, but we've got a mission or a struggle to actually connect the two to one another. And I do think that blockchain actually offers us that solution to get the two to one another efficiently. I'm not saying it's never been possible, certainly not. Again, administrator for 10 years, but there's definitely easier ways of doing it.
Okay, brilliant. Nersan?
Yeah, Graeme, I think there's a couple of lenses you can look at it through. So if you start from the lens of being an asset manager, like you are, I think our jobs as asset managers is for clients to find the best possible investment opportunities, right? And so I think you had a nice quote that started your presentation this morning. You look for those areas that are underinvested, that provide the best return opportunities for investors, and you find ways to extract those opportunities, right? So that's one lens that you can look at it through, and I think the crypto ecosystem more generally offers some fantastic return opportunities for investors. The other lens that you can look at it through is market infrastructure, and I think, for those of you in the room who operate in financial markets, our market infrastructure is probably 50 years old. In terms of the rails we operate on, not much has changed. If you think about innovation in financial markets, you can't really point to things that are very innovative that have happened in those financial markets in the last 50 years. If you're a trader 15, 20 years ago, not much has changed in the market in terms of the way it operates now. When you think about tokenization, and I think in one of the other panels, the discussion, I think it was the banking panel where you spoke about this idea of all assets going on chain. It will take a while for that to happen. But as all assets go on chain, and you get more instantaneous settlement, you get cheaper transactions, you create access, financial inclusion, all of those things. You free up capital that's typically tied up in settlements now. That's a very interesting dimension of where markets are evolving to. And the third one, which we probably didn't spend a lot of time today talking about, is the coming wave of AI. Right, and not necessarily from the typical perspective of it's going to just disrupt jobs and that sort of thing, but I think more from the perspective that any and all of you are using AI at the moment will realize that what it does is it creates abundance. Right, digital by association is abundance. Everything you can do digitally is about creating abundance, and if you use an LLM like ChatGPT or whatever, you'll realize in your individual capacity you have the immense ability to produce an abundance of things. We live in a world now where you can't trust what you read in the newspapers. I actually saw a headline this morning from, I don't know which newspaper it was, but the journalist forgot to clip out the piece at the bottom where ChatGPT normally tells you, if you'd like me to rewrite this in such and such a way. So you actually had the thing printed on the front page of the newspaper with that little bit in, so the editor missed it as well. But I mean, it's widespread usage, right? So then the question becomes, if you live in that world, how do you find truth? And where do you find truth? And the only thing that creates truth in that world are blockchains. That's the bottom line. So AI creates abundance, crypto creates scarcity. So to balance what AI is doing, you need blockchains, which create digital scarcity, and you can't talk about one without the other in the world now. So I think if I look at it, Graeme, through those lenses, and I think the time we're living in, where the world is going, is extremely exciting overall, but particularly for people who operate in a crypto blockchain environment.
Just maybe, sorry, Graeme, a good analogy. I don't know if there's any rugby fans in the room, but blockchain is to AI what a back of forwards is to a backline. Now clearly you can see I was a forward. So, we're the guys who get the ball in a controlled fashion to the stars, who's the AI in the back. So, truth, you're quite right, Nersan. I mean, we can't live in a world with the abundance of AI without blockchain.
Okay, great. I thought you were going to drop your mic there, Nersan. Blockchain is imperative for identifying truth in the world. That's profound. So I'd like to just pull out some conclusions. I don't want to put words in your mouth, so correct me if I'm wrong, but from Nersan's perspective, he's an asset manager. He's looking for how does he deliver better investment returns to your clients, right? And you're looking at crypto assets as an interesting new asset class to derive that. Werner, you've got existing traditional fund structures, and you're looking at blockchain technology to tokenize those assets and make it more easy, accessible, liquid, for your investors actually to have a better experience. Reg, you a bit of a mixed bag. I mean, you see obviously lots of opportunities within Sanlam, and I think that just speaks to the variety of different opportunities out there. But it's interesting that 3 different people on stage, one asset class, one technology, but different use cases and opportunities that we see. So what I'd like to do now is let's find out what actual wins we've had in the real world, right? So a lot of this is quite hypothetical, and we're talking about the future, but within your institutions, have we had any proper wins yet? And if you haven't, it's okay. But it'd be really cool just to understand where are we in this journey towards what this technology can do.
Yeah, I'm happy to kick it off. Just to give you an idea, I'll give you probably 2 use cases and one just general story. So we've, as I said earlier, we've invested in some funds already for our clients. Because one thing you need to understand, as I said earlier, a large part of what we have to do is make sure that when we advise a client or help a client invest in a structure, we've got to make sure that they can deal with that in their estate, as an example. And I always use the example of, if I get hit by the proverbial bus tomorrow, I can tell you now my wife and my executor will not have a clue how to find keys and all, so there's those type of nuances that one forget about. That is a reality that we have to deal with. So we've had to solve a couple of those things for our clients. So we typically, in our traditional world, still us having proper blockchain rails to deal with this stuff, still have to go the fund route or an ETF route to give our clients exposure, right? So we've done some of those things. But I think what we're busy implementing now, and talking about the infrastructure side to the bridge building piece, right? So we have invested in a lot of interesting things for our clients, but because we are traditional finance, and I know it'll be a miss of me not talking about some of the comments made by the MC earlier about us traditional finance guys and how we, with this information what did he say? We close the market so we can do nefarious things at the night and extract value with the information disadvantage. I mean, everyone's got their views, and that's what makes this world a beautiful place, right? But ultimately, when we go and put infrastructure in place, we still sit with legacy systems, right? And it's not that easy for anyone that's worked in any business to just go switch today from your old way of doing things, which we know it's inefficient, right? I could tell you all this cost that everyone throws stones at and say, look, you got this person signing off on this and there's manual intervention here. We don't want to be in that world, I can tell you now. But to move, we sit with 230 billion rands worth of assets in a variety of shares, ETFs, CISs, private equity. You don't just move that stuff onto blockchain and tomorrow the world's a better place. So we are on some of these inefficient platforms. We're working with a company that does blockchain, and they take something like private equity. Private equity is a very complicated thing to invest in. Limited liability partnership structures, big legal contracts. Every time we go into one of those things, we've had great returns for our clients, but I can tell you it's not worth the effort, the amount of work we have to do on that, right? So we've got a blockchain platform that is now taking all that contracting, putting in a smart contract. Doesn't change the nature of the underlying investment. The client still has all the benefits of it. But we just simply plug into one place. We can go into private credit. We can go into private equity. We can go into a lot of things that the traditional platforms can't deal with. And we can make it efficient for our clients and cost effective to invest in those things. Because that's often where the friction points are. So those are the things that we're busy with. So, and the last point I wanted to make, I mean, I've got some of my colleagues sitting in the back. I can tell you now, even in an old traditional place like Sanlam, I actually wanted to come with my grey shoes and my suit and everything today, because that probably would have fitted the profile. But even in a place like Sanlam, I can tell you the conversations going on there about the tokenization, the blockchains, the payment rails, everything. There's a lot of challenging conversations going on about how we can take the business forward in order to move into this world. So it's not that we're sitting there as these big incumbents and just sitting lazy and waiting for the next wave to wash over us and take us out. There's a lot of innovation taking place in places like Sanlam, and you'll see more of that stuff coming down the track as well. And you heard the same from the banks today as well. So,
Reg, I've got a quick solution for your private credit, Just saying.
Yeah, no, I know you across the road from us. We know you well.
Cool, Werner. Tell us about your progress.
Thanks, Graeme. Yeah, so I think we've certainly moved from that conceptual thinking phase to let's build. So I think in the next 12 months we'll probably see us arriving to a point where a tokenized share class will be sitting next to a traditional share class. Like I said earlier, governed by the same framework as oversight framework as the traditional funds. So yeah, I think we've moved beyond that phase of, you know, do we get exposure to this? Don't we get exposure to this? Is this gambling? Is this legit? To how do we responsibly get exposure to this, and what, you know, guardrails are necessary for us to invest in these kind of assets. So yeah, I think, you know, we've made a lot of progress beyond that thinking phase. So yeah, that's really where we're at the moment.
And I can definitely see that, right? I think the attitude of institutions, especially attending conferences like that, it's no longer investigation. It's no longer, let's see what's happening, let's see what the crazy crypto bros are up to, just so we can say that we're kind of keeping our finger in the pulse. Like, there's a change of attitude from investigation to actual action that we can see many developments, which I think is pretty awesome to see. Nersan, want to tell us a bit more about your guys' progress?
Yeah, well, before we do that, which one of us is going to break it to Reg that he's wearing grey shoes?
Not the traditional, huh?
I'm just teasing you, Reg. Yeah, MidSquare, so we're an asset manager. I said we try to get returns for clients. So if you want to try and benchmark success in a business like that, you have to ask two questions. Are you getting clients? So yes, we are. I think we've been taking clients pretty much every month since we started, and we've been going just on about 2 years now. So that's been fine. Returns, we run two funds, a high-risk fund, which in the 2 years the fund's been running has compounded at about 45% in US dollars per annum, which isn't bad. It's running at a vol, which is important to understand, running at a vol of about 30. So a Sharpe ratio greater than 1, which is important. We run a low-risk fund, which is just cash exposure. That fund tries to effectively significantly outperform bank cash. That's compounding at about 12% per annum. It targets 8 to 10, compounding at about 12% per annum at a vol of 0.7. So extremely high Sharpe ratio on that fund, and very low risk. So performance has been there. Assets have come through on those metrics comfortable. Since we're talking about institutional adoption on the panel, we last year sold a minority interest of MidSquare to an asset management business called Fairtree. So if you don't know it, Fairtree is probably the premier boutique asset manager in South Africa, 200 billion of assets under management. Fairtree acquired a significant minority in MidSquare and made significant asset commitments to the business as well. So the significance of that really is you've got a mainstream traditional asset management business who's now taken a play in digital assets more generally through acquiring a stake in MidSquare. That partnership has gone really well, and I think probably early next year, Graeme, we'll probably have 1 or 2 more material institutional partnerships in place as well.
Okay, brilliant. So the final round of questions. I want to understand from you guys, what do you think, or what catalysts would you love to see, right, within our industry to make some of the potential opportunities you've seen become a reality? Do we still need some of the leadership within our bigger institutions to have a mental shift of innovation towards this asset class? Do we need greater infrastructure and supporting accountants and lawyers, etc., to upskill themselves? What do we actually need? Or is it the dreaded R word, regulation, that we need to change in our favour? What do you guys think?
Well, I've got my tablet open specifically for this question because I will forget this chap's name. I think what's been very evident today, and over the last 18 months, we've got custodians that started looking forward, started innovating, building infrastructure. We've got administrators who's committed fully to blockchain and administering crypto assets. We've got exchange infrastructure that's been phenomenally developed over the last couple of years. The challenge, obviously, is regulation. Look, let's be honest, I'm glad I'm not a regulator. To try and regulate this, sometimes potentially difficult. They need to think about investors. So that's why they're careful. I think it's new. Human nature is to be scared of whatever is new, or cautious of whatever is new. And the perfect example of this, and here's my tablet quote. I don't know, Nersan, you said earlier that the way we're doing traditional funds at the moment, it's about 50 years old. The first collective investments fund was actually established in 1774 by a chap called Adrian Ketwig, who's a Dutch guy.
Is he in the audience?
The challenge is collective investment schemes only became mainstream about 150 years later. And not much has changed, in how it's structured. It's what we know. But to give you an idea, something as mainstream as a collective investment scheme today took about 150 years to take off. Now, hopefully, blockchain and crypto assets won't take 150 years to become mainstream. I don't think we're much further ahead than that. But it's that fear of the uncertainty, that fear of whatever is new. And we've seen that in the past. It's really now to manage that let's call it the fear of the unknown.
Cool. Go for it, Reg.
Yeah, you can't get away from the regulatory thing, but it's a double-edged sword, right? So a simple example, we know the biggest savings pools in South Africa sits in things like pension funds and CISs. And we heard earlier from some of the panels that the regulations don't allow you to go into, but like any crypto at the moment. Now that even includes, and you could probably have some open-minded trustees, but if I tokenize a share, which a share is you're not investing in it, but that token will be seen as crypto, right? So it's simple things like that. So even for us to bring in better efficiencies, you still need to unlock that piece of it. Now, we know the US is ahead of the game. They've, with Mr. Sachs is doing some interesting things on that side. I do think you need to bring that in, but I just want to flip it on its head. So you do need to get that first piece just to open the door. The flip side in our industry is the reason why a lot of people are probably sitting here, and we heard things about serving the unserviced, people in the economy. There's a lot of people that are unbanked, et cetera, et cetera. And a large reason for that is over-regulation, right? Because the cost of doing business is so high. If you look at what's happened in the UK, we typically follow, in our industry, the UK and Australia with the regs going on there. I can tell you now the amount of regs they've thrown at the market now, you cannot service a client under a certain AUM anymore and make it profitable as a business, right? So the more regs you throw at the system, the more people get sidelined. So it's just something to be aware of, because where this thing started was anti-regs. Now you need the regs to make it mainstream, and then at some point you just got to get to a point where hopefully we still need to solve, and where blockchain should play a massive role is in this unbanked, underserviced economy in South Africa, or part of the economy. And you just got to, as much as we want mainstream adoption, you just got to make sure that you don't lose some of the focus of some of the benefits it can have as well.
Yeah, cool. Nersan?
Yeah, catalysts, I think education is probably at the top of the list. We have to find ways to help people to understand the space a lot better than they do currently, because I think if you understand the space more and you start moving away from the notion that it's Ponzi or a scam, or these are fictitious assets or magic money, whatever you want to call it, and you start understanding some of the fundamental principles about what blockchains are, why they're important, why as a technology they transform the world, some of the stuff we spoke about AI earlier, then you start seeing the value in the assets, and you potentially get progress more generally. So I think education is a key one.
Can I just ask for clarification there? When you say education, at what level? Is that for the man in the streets, or is it for your executives within the institutions to adopt this asset class?
Yeah, I think it's at all levels, Graeme, but probably for adoption. So bottom-up adoption in crypto. Crypto is a bottom-up technology, right? It's what makes it very unique relative to other technologies. It is currently a bottom-up technology. So you've probably got more adoption bottom-up than you do top-down. To get that mainstream adoption, I think you need to start getting education at executive level in companies, trustees on pension funds, the regulator. Now we wanted to stay away from the regulator a little bit, but and this is probably the harder point to digest in terms of catalysts, and it applies broader to just crypto. But what you effectively need for regulations is you need a state that has the ability to attract the right level of expertise into the state. And we sit with a dire problem in that sense, that the state here cannot attract the right level of expertise. If you parallel to probably one of the leading regulatory jurisdictions in the world, the UAE, they have a dedicated digital asset regulator there, the VARA. The guy who runs the VARA is literally a rocket scientist. You know, he's a PhD in astrophysics. He spent probably the better part of his first year attracting the right level of people into the regulator to be able to regulate the space. So I think we have to find some way for the private sector to get more involved to support the regulator, or we will struggle on that front because the state alone won't attract the talent in. And then the last thing, I think, whether we like it or not, from a catalyst perspective, is the rate at which the US is moving. You know, after being a sleeping giant through the Biden administration, you know, post-Trump's election, you've had the Genius Act pass. The Clarity Act hopefully will pass later this month if we're lucky. That clarity around market structure from the Clarity Act, the regulation of stable coins from the Genius Act, effectively will force US fund managers to start holding crypto, whether that be stable coins or others. And the effect of that will be everyone who lives in a country like ours, where you externalize 45% of the money, which inevitably finds its way into US fund managers, means that trustees are going to hold crypto, whether our regulator likes it or not, which should then kick the regulator to a point where they realize if we don't regulate it, we're going to have these unintended consequences in the market more generally.
Awesome, guys. Yeah, I think it was very informative to understand where we're at within the different businesses. Is that it, guys, or is it time for some questions? Okay, any questions? Oh, we've still got 3 minutes.
Again, difficult questions, clearly for Nersan and Reg. If you want to ask the child questions. Oh, damn it.
It's just on your at Skybound, so where are you in the process of tokenizing your product?
Quite far along, Greg. Unfortunately, we are looking at Mauritius. Mauritian legislation is a lot friendlier to tokenization than the South African legislation. It helps that our flagship fund has been sitting in Mauritius for the last 16 years. So quite far along the line. Yeah, so like I said, we'll probably see something in the next 12 months.
Can I maybe just put out one request to all the techies in the audience? So one thing that we've struggled with as a business is whenever someone's come to speak to us about blockchain, they start off with a very technical discussion about the immutability and the stuff that none of us understand. It's like someone coming to sell me software and they start talking about C++ or Python or the next language. Talk about the utility and what it does, and then that's where I think the conversation has shifted a lot, and where people are starting to understand where the value in this thing lies, and use normal conversation or normal language, right? It's the same when we talk financial stuff to our clients. We forget how little our clients know about what we do, and we got to keep it at a level that they understand. I ask the same. We are not at that level. I'm never going to understand all of that stuff, and it shouldn't be my job to understand it. So I think it's quite important.
But it's an interesting point as well, and I mean, you touched on it about at what level we need a change in mindset or education. So, and if you think about the remittance models, right? When you're sending money offshore through SWIFT, you don't know that it's SWIFT moving your money. You just know that money leaves your accounts and it magically, in a few days, and with a bigger bill, lands in your dollar accounts overseas. Right? So that can happen obviously a lot quicker, potentially with stablecoins and with a blockchain technology in the back end. But if a bank really builds an efficient system, as the front-end user will not know, right? Whether it's SWIFT or whether it's a stablecoin with a blockchain that's actually using executing your trade or your transaction. You just know that there was less coming off your account and it landed a lot quicker. So yeah, I think that's the exciting part from a user perspective, where I think we're going to get very interesting solutions in the future. All right, thanks very much for your attention.
Thanks, everyone.